You guys ready for this one? This is going to be exciting. Let's go ahead and bring up Jack Ballers, Adam Back, Paolo.
What's up, guys?
All right. Everybody's heard this Bitcoin Treasury thing a ton, and I think the first question we've got to start with is, can somebody explain this thing very simply for us? Can somebody make this actually accessible? Because I think all the financial jargon that goes into this, whether you understand a fixed income market, whether you actually understand security analysis, whether you even understand Bitcoin, and mixing all these things together makes it pretty difficult and challenging. So who wants to start off by trying to, go ahead, Adam. You seem anxious.
Yeah, so I was just going to say that it's you can think about it on a personal level, like could I borrow against some collateral, like if I have an apartment or a house that's unmortgaged or undermortgaged, or could I take a unsecured loan from a bank, use that to buy Bitcoin? Some people do that, right? Now the question is, if you have a friend who owns a dentist business, it's a steady business, and he borrows £1 million Swiss francs, and then he offers you to buy 10% of his dentist practice. And you're like, well, I could do that myself. And then you realize, actually, he has better access to capital than you, his interest rate is lower, he has this kind of soft collateral, which is just the business, right? And so you do your calculations and you realize, he wants a premium for it because he has better access to capital. You're offended, but you do the calculation and you realize it's still a good deal.
So effectively, you're saying there's illiquidity discount that's applied to a company that's not public versus one that is public that has this much bigger multiple because you have the ability to turn it or use it like it's cash almost. Is
well,
that
I'm just starting with a private company because a private company is just a few people with a small private, like a family business, right? And even they have an advantage in access to capital to the individual. And then, of course, public market companies, the market tells you what the premium is. But even with a private company, you can see that if they're able to raise capital at a much lower interest rate with much more flexible terms than you, it makes sense to become an investor in a private company to share in that Bitcoin upside. And then once you have a public company, the premium is set by the market, right? And public companies have a lot more advantages in raising capital, better access to capital.
Yeah. Paolo, I remember interviewing you, I don't know, it was probably a year ago or whatever, and I asked you the question, I said, do you feel like you're at a disadvantage operating a private entity as you look at MicroStrategy that's a public entity, and if that public stock is trading at an MNAV of 2, he can basically use that common stock as a currency to go buy a bunch of Bitcoin, put it on the balance sheet, and compound it really fast without really the business operations really meaning all that much. And when we look at that company, the business is making, call it 75 million a year, but yet he was able to grow the balance sheet at a pace that was 100x or 1,000x more from a retained earnings standpoint than what he would have been able to do if he wasn't doing this trick. Your answer to me at the time was that you said, no, we're working on these other things and we're just really happy being able to build and be self-contained. But then it was probably a month later, 2 months later, there's this 21 announcement and you were heavily involved with that. So my question, because that was a long impromptu for this. My question was, is that something, is that a play to dabble in both public markets and also retain the autonomy of the private equity and do those things that you were talking about earlier, that you see value in this and you see value in the Treasury company play?
So I'm very good at distracting people with changing strategies so that they cannot catch me. The beauty of Tether is that we have a lot of dollars that we use to buy US Treasuries that yield an X% per year, between 4 and 5%, that then when we get the output of the interest on these treasuries, we go out and we buy Bitcoin. In the last quarter, we bought 8,888 Bitcoin. And also we use part of that capacity to contribute to 21, right? So Tether is in a very unique position. Normally, you would be right, being public as a company would give you access to that. we are in a very lucky position. Tether itself has a huge balance sheet that is providing a lot of cash flow and allows us to buy Bitcoin. But at the same time, there's a huge opportunity in the public markets, as you said, that that's why we wanted to contribute a portion of our Bitcoin to this new initiative, because it's a way for companies and to demonstrate that companies can maximize their Bitcoin per share if there is a good process, a good CEO like Jack.
Yeah. Jack, anything?
You got a question for him?
No, anything you want to add to this idea of taking over 21, how you're thinking about, having so much Bitcoin on the balance sheet with somewhat of a lack of any type of operational business there today? How are you thinking through the mechanics of that moving forward? Is it more strategy-like? Is it more kind of where Adam tends to be wanting to go, where he's wanting to maybe acquire operating companies?
Yeah, well, I would say the world doesn't know our operating company plans because the SEC hasn't allowed me to tell everybody yet. So if someone wouldn't mind...
you can't answer the question.
No, if someone wouldn't mind trying to unplug it and plug it back in, the government, we'd appreciate that. But I love the SEC. They know that. I think my opinion on Bitcoin Treasury companies, I would say from founding, 21's never considered itself as such. I think it's a really loose term. And this industry does that sometimes where Satoshi created Bitcoin and it's a decentralized cryptocurrency. And then Vitalik Buterin prints a bunch of tokens in his basement and goes, I'm also a decentralized cryptocurrency. Yeah. It's like, well, that's not technically the definition of decentralized, but now decentralized and cryptos become something that's impossible to define. It depends the circle you're in and what you're talking about. I feel similarly about Bitcoin Treasury companies. I mean, do we have a Bitcoin Treasury business? Absolutely. I love shorting the dollar and longing Bitcoin. It's an incredibly profitable, but yeah, someone gave me, That's historically a tremendous business, and to have the capital partners like a Tether and a SoftBank, and to be able to do that at scale and access to the capital markets, that's 100% part of our company. Yeah. But this founding group, I think uniquely, has built incredible businesses in the space, high margin, high growth, net profit cash flow. And one of the opportunities we saw in the capital markets, I mean, Paolo and I have been in Bitcoin for over a decade. The capital markets and institutional investors were never picking up the phone for us. And what we saw with Strategy and Michael Saylor is there's big pools of capital that want to participate in Bitcoin. And we thought one of the other unique attributes we could bring to the capital markets is incredible businesses. And this group is very unique in the experience that we have and what we've achieved together, to where we think we're not just a treasury company that's optimizing to short the dollar and buy Bitcoin, which is a great business and it's absolutely part of ours. But also, we think we can build cash flow and build utility on top of Bitcoin, and access to the capital markets is going to help us do that with some of the products. So as soon as someone turns the SEC back on, I'm happy to tell you guys about it. But yeah, I don't know if we're a Bitcoin Treasury company. The definition has changed a bit, in my opinion.
Yeah.
We're a Bitcoin company.
Yeah. It was funny, you said you and Paolo, but you left Adam out. Were they answering the phone for Adam? Is that why you left him out of that comment?
Yeah, Satoshi, right? Kidding.
They were picking up the phone for Adam, okay. So let's talk about hurdle rate, because when, as a person that really liked Warren Buffett and studied him for many years, it all comes down to the rate of return that you can invest. And I think for all the people on the stage, we're looking at Bitcoin, we're saying that's the hurdle rate. I think it's around 40%. Power law kind of suggests it's about 40%-ish, somewhere in that ballpark. Maybe it's 30, maybe it's 50, I don't know. A nod of the head if you guys kind of agree that that's where you're kind of thinking. Okay, sure. You guys seem to agree. So the question really kind of comes down to, when we're thinking about treasury management, is if you are going to bolt on a fully owned operational subsidiary into the company, it has to be purchased at something that is comparable or better to this crazy hurdle rate. For anybody in traditional finance here, and you're kind of new to Bitcoin and you see us all nodding our head at 40%, you probably think we're crazy. But that's truly the economic calculation that these guys are doing as you're looking at the management of your company. So my question for you is, if you're going to buy a fully owned operational subsidiary, you have to pay a PE of 2 or a PE of 3. Assuming that it's a stable business, it's not something sexy with a top line that's blowing out. So those multiples are like crazy low relative to how the rest of the world is priced because of fiat. How do you think through that as somebody that's trying to acquire the challenge of that as you're trying to acquire fully owned operational subsidiaries if you're not doing the MicroStrategy securitization of Bitcoin through the issuance of preferreds or convertible debt?
Well, I mean, I would say I think eventually all companies will be Bitcoin treasury companies. It's just a question, and like asset managers generally, right? I mean, that's where the Bitcoin as a hurdle rate came from, because that means something most directly to professional fund managers, because it's how they get their hedge fund return calculation. And so the argument there is, well, if you're a fund manager and you can't outperform Bitcoin, and it's a long-term investment plan, you should probably stop and buy Bitcoin, or tell your clients to buy Bitcoin. And so, then if you turn around and apply that to an operating company, how do you keep up with Bitcoin? Well, I think you have to use Bitcoin as your cash reserves, and of course some, volatility and cash reserves apart from Bitcoin, and, reinvest in your business to grow your cash flow, use some of that to buy Bitcoin, and then if you're a public format, use the capital markets to, amplify that effect. But I think, there's been a mixture in the market of pure plays, like MicroStrategy has basically become a pure play because their core business revenues become de minimis, but there are also a great number of pure plays, and I think we'll probably see a kind of return to more operating business revenue, and Bitcoin Standard Treasury, the company that I'm working on, that is also waiting for regulator approval. One of the differentiators we put to the investors, which is on the SEC site, is that we would actively manage the Bitcoin to develop an internal return. So I think an internal return is an important part of it, whether that comes from operating a high cash flow business, from making the Bitcoin capital work for you. I think that's part of what sort of drives the MNAV flywheel to start.
Yeah.
Yeah, I think, again, for Tether and I to found something together, sometimes you'll log into Twitter to say, oh, this treasury company should acquire this really profitable bakery because they have now they have cash flow. And I'd agree with you. How do you value that? What's the future growth of the business? Is it going to outgrow Bitcoin? But, the founding group, the board, we've built cash flow generating Bitcoin businesses. And so I've already been a leveraged Bitcoin company. Mine is just private and it's called Strike. But we don't plan on bolting on like a PE firm, adjacent industries that might not be in parallel. We want to be a Bitcoin business. We know, because we've achieved it, that there are tremendous amounts of business opportunity in the asset class. Now, it's difficult to do, but that's part of what we thought we could bring that's unique. So it's not as...
You've done it, right? So you know what to kind of look for.
Yeah, we've done it. And like a company like Strike, it's like, have we kept pace with Bitcoin? Yeah, Strike is leveraged Bitcoin. It's a cash generating. When Bitcoin goes up, we get more business, right? Yep. As Bitcoin goes up, we have access to launching more products. And so, and Tether the same.
That was a very Italian accent, by the way.
Was it? Hanging out with Paolo too. Bravo. But the thing, like, if you look at Tether's correlation, USDT's correlation to the Bitcoin market cap, like Bitcoin doubles, USDT's probably going to double, right? And so I think we aren't operating in this like, well, how do we think of disjointed parts of society that don't understand Bitcoin yet? We're very focused on where we've been successful, and I think that's what the capital, my interpretation of what the capital markets want is they want blue chip credibility and startup upside. I mean, everyone's looking at Tether's earnings and businesses like Coinbase. They want to participate in Bitcoin's story. When people say, well, do you consider yourself a strategy competitor or a Coinbase competitor? And I say both. They say, that's crazy. I'm like, yeah, but you're crazy. So I don't know. I don't think we're not interested in buying like a hotel, for example.
Okay. Paolo, anything to add, or are you good?
No, I think,
You're good.
yeah, good.
So there's a little bit of debate, getting more into the nuance of like how some of these companies are doing this. Saylor's going out and he's issuing a ton of preferred stock. And I think for the outsider, they look at the preferred stock and it creates this perpetual drag, expense drag for the company, and at somewhat of a really high rate. So he's paying out anywhere from like 9 to 10% right now in dividends of a perpetual cumulative preferred that is never going to leave his balance sheet. Like, it's there. If he wants it to leave the balance sheet, he literally has to go and buy all that preferred stock back off the market, versus a convertible debt issuance, which we've seen rates as low as 0% with convertibility 5 years later on the face value of that debt. So I'm kind of curious if you guys have opinions on one versus the other. On the face of it, it looks like, no pun intended, on the face of it, it looks like, the preferred is way more expensive, but there's a reason he's probably doing it. I'm kind of curious where you guys stand with respect to convertible debt and preferred issuance as a tool to securitize the Bitcoin on the balance sheet.
So BSTR did, we're going through the process. We did the fundraising, and that closes when the regulator gets busy and deals with that. But during the fundraising process, we raised a number of different. So we raised both types basically. So we did an equity pipe, a Bitcoin-denominated equity pipe, I think the first of that type, and then a convertible note, same kind of thing as the convertible notes MicroStrategy did, and then a convertible preferred as well. So I think we were the first to do that, during the SPAC fundraising process. So, we have an allocation across them.
On the convertible preferred, and I don't know the dividend that you were paying, were you able to get a decrement in the yield of that dividend because it had the convertibility piece to it?
I believe that's generally the case. I mean, it's a 7% coupon, but they also generally, in the first tranche, people generally place them at a discount. So that's part of, you can calculate the implied interest rate. It's probably a bit higher because of that. But, people are doing that to build, to build demand, and then they will try to sell later ones.
Did you have any issues hitting the mark? What was the value of the preferred that you guys came to market with?
It was over 300 million. So
300 million.
Yeah, yeah. So
and no issues on demand.
I think we could have placed more. So it was upsized during the process, very compressed process. So I think Saylor, who's been able to talk, has been very communicative about his learnings through the process, right? They started with the bonds, moved on to the convertibles, the at-the-market share selling, and now the preferred. I think he's been vocal that he thinks the preferred is a better strategy, and he appears to be trying to, repay the converts or get them converted and move across to preferred. So that's his view. I think one way to look at those high interest rates, though, is, let's say it's 10%. It's 10% when Bitcoin is $100,000, but it's 1% when it's $1 million. So I think he has an eye on the far future, and he's just trying to buy as much Bitcoin as he can.
He's burning the ships effectively by leaning more towards the preferreds than the converts. Is that a simpler way to say it?
I mean, I think it's not creating share dilution. If you sell a convertible note with which he did at different points in the market with a 0% coupon and a 50% conversion premium, then he gets 150 million to buy Bitcoin today, and assuming it converts, he only experiences $100 million worth of dilution.
Yeah.
Now, with a preferred, they don't experience. If it's not convertible,
face value never comes back.
Like something like Stretch, there is no convertibility, right? So they're able to buy Bitcoin, so that increases the Bitcoin per share more dramatically than a convertible or an at-the-market share sale. So he'd have to speak for himself, but you can see it's a different formula ultimately.
Jack, you got opinions?
Always. Listen, I think sometimes this stuff can get so complicated, right? I think taking a step back, there's a cost to borrowing money. If you spend enough time online, they convince you that's not true. But, I see some of the Cantor guys in the front row. They've put me in incredible meetings, and I've talked to some really wealthy folks. Never in my life have I said, can I get $1 billion? And they say, well, what do I get? I say, nothing. And they, deal. That's never happened. And so I think, the cost of the convertible instruments is there's a lot of short pressure on the stock, right? Saylor Michael's been very vocal about
the delta hedging on it creates less volatility on the common.
Yes, you're monetizing volatility. And again,
Yep.
I hate the word salad because there's going to be people in the audience like, what the f is this guy
What is
talking
he
about?
talking about? Yeah.
You're selling a product to someone that isn't necessarily interested in your company. Okay, and so they have no problem shorting your business, which is betting against the best interest of what you spend every waking day on, in order to create a little spread. And that little spread gets them the house in the Hamptons and stuff, and they have no problem you failing or succeeding. And so that causes potential complications in demand within the market and how the market is constructed, and Michael has been very vocal about that. And so then the approach of, hey, instead of doing that, why don't I sell this preferred product? And it's a perpetual preferred. Perpetual meaning you owe money forever.
Unless you buy the shares back. Yeah.
Right. But then the problem is, okay, great. The cost has gone from I'm selling a product to someone who's going to then like bet on my failure, to I'm selling a product to someone who I owe money to forever. And so now it's, instead of someone else shorting your stock, now Sailors has to sell his own stock. Because he can't finance the payments.
Potentially, yeah, if Bitcoin hasn't ripped and gone up like we...
Right, but what I will say about MicroStrategy and Michael, and we're friends, and he knows this, Michael does a great service to humanity by going out, taking risk, and being brave, and allowing guys like me to learn. He's never charged me a dime to learn from him, right? That's the way I think about. He's a pioneer in that way. He's never invoiced me for, hey man, all the things you've learned watching me over the last 4 years, here's the invoice. It's never, ever. So it's a great service that he's going out and trying to pioneer these things, and someone like 21 can walk in his footsteps. But so far, these preferreds, it's transferred the cost of borrowing money, and it's repackaged it, and it's kind of flipped it around, but it's still there. And you know, a lot of the conversation on the internet is that, no, there's no cost to borrowing money. And of course, like practically, if you take a step back and you say that on the street, someone's going to think you got dropped on your head as a kid. Of course there's a cost. And so that's one of the reasons that we're also focused on building a business with cash flow and utility, is, you know, being able to finance things practically. And so, you know, I think the convert market worked really well for Michael. And maybe it's too small for him. I don't know if it's too small for us. I don't know if it's a bad idea. And the preferreds, it's a great idea on paper. And I think it could absolutely work. But right now, I think the market so far, it's been difficult because there's a constant seller of common, right? Like you need to, you know, you need this new investment to pay out. And so that's my very honest opinion. But I mean, I absolutely applaud the ingenuity behind it. And we'll be the first to innovate, given, you know, he figures out another $100 billion idea. He's already done it once, so.
Yeah. This question's, yeah, good job.
Thank you.
People backstage are going to pull the hook on me here, but we got 2 minutes, and this is a really big question that I want to ask Paolo. You're securitizing U.S. Treasuries. They yield 4.25, somewhere in there right now. You know, I'm speaking very generically and very quickly here. They yield that, and I look at what Saylor's doing with his STRC preferred issuance. He's trying to, for all intents and purposes, and this is a huge generalization, he's trying to create a stable coin, if you will, that pays 9%, 10% with an adjustable rate, but he's trying to peg it at 100. And I can only imagine a world 5-10 years from now when we start really tokenizing real-world assets, where somebody could take that STRC issuance, they could tokenize it in some crypto kind of way, and then people could own that and hold it. And if he's actually able to keep it stabilized at the 100, it should perform like a stable coin that maybe pays a higher interest rate than a U.S. Treasury. Okay? So as we play this forward and we look at it, what is he effectively doing? He's effectively using Bitcoin in an over-collateralized way, 5-to-1 over-collateralization, and assuming he's able to sustain that in some kind of way. And we look at Bitcoin's volatility, as long as he keeps it maybe 5-to-1, maybe that could be a Bitcoin securitized stablecoin. You're securitizing treasuries that's paying a lower yield. Is this where this is 5-10 years later? Is this where this is going, is securitizing Bitcoin so it has dollars? Like, am I talking nonsense here? How do you think about this, Paolo, with 25 seconds left?
Buzzer beater.
I don't know. I think No, thinking about, so I think Michael is doing a great job, as Jack said. I think he's opening the pathway for many companies to look at what he's building and maybe take a different approach. Like 21, I wish for 21 to be the greatest Bitcoin company in the world. To me, means that should encapsulate, embody Bitcoin Treasury, but also operations and services on Bitcoin and Bitcoin education, right? So that type of company in under a single umbrella is missing, and so that is an opportunity to do something different. What Michael is doing is elegant, but is financial engineering, and instead I think I would like to have a public company, a public Bitcoin company carries forward the ethos and philosophy of Bitcoin, and basically is almost like Trojan horse within Wall Street itself. I think that just some of the things you said brings me back to 2022 and stable coins that were algorithmic. So it's one thing is like, I don't want to go there. I'm not saying that Michael is doing that, but I think there is, in simplicity, there is elegance and there is strength. So we should think about the concept of stablecoin, why people should use stablecoins. Stablecoins are a reflection of the dollar. People should use less, and hopefully in 10, 15, 20 years, and 30 years, we're going to use less and less the dollar and use Bitcoin directly, right? So I think it's always a question of why we want to have a stable coin. I think that, as I said many times today, is all relative, and we should actually, the trajectory where we're going, and what I hope 21 will do is actually reduce the need of people relying on actually a dollar economy and move towards a Bitcoin economy.
I know we're getting kicked off, but on top of that, obviously 21, we're looking at these products and the preferreds and watching Saylor closely. It's really important to note that, when you're constructing a balance sheet and you're accounting for it, STRC or these products, they're not cash and cash equivalents, right?
Yeah.
You are buying it. And so, we talk about them like, oh, they're going after the money market, they're going after T-bills.
Yeah.
But on a balance sheet, they're not cash equivalents, right? And that's a really big deal when you get down to brass tacks of how the market is going to interpret and perceive and find use in these things. Because if you want them to be used at scale, and I'm not speaking on behalf of Tether, just generally customers, right? Whether Tether's a customer of these products or anyone, it's where does it sit in the capital stack? What is it accounted as? Because that has implications on building products on top of it, further servicing it to consumers. Does that make sense too? So it's a really important delineation. Because we talk frequently online that, it's going after T-bills and money markets, but those are cash equivalent products, which it's just a little different. So it'll be interesting to see how it progresses.
Oh, yeah. Thank you, guys, for the
Thank you.
Yeah.